Why is everyone making money but me? I buy, the market goes down. I sell, the market goes up. Hey guys, it's been a while since you've seen me. Don't even ask what I've been up to. I've been so busy, you know. Anyway, I'm glad to be back to trading. So, are you having these questions? Why is everyone making money but me? I buy, the market goes down. I sell, the market goes up. Nothing is working. It's making you go crazy. Instead of you going up, making money, you're losing money. Is this the kind of question that you've been asking yourself? If yes, then this video is for you. If not, then
yeah, I don't know what you're doing here.
Welcome to my 2023 very simple trading strategy. To this technique, there's only 4 areas that you need to focus and respect. When I say respect, it means you need to follow it to the T if you want to be successful. So point number 1 is you need to identify a strong break of structure on the 4 hours. When I say 4 hours, I don't mean 2 hours, I don't mean 1 hour, I don't mean 30 minutes. If you want to do that, that's up to you, but you need to go and backtest that. I'm talking about the 4-hour time frame. The higher the time frame, the stronger the signal is. This is just a very generic logic behind trading. Point number 2 is you need to wait for some sort of pullback to the golden Fibonacci level. Point number 3, you need to wait for some sort of liquidity to be generated and taken, and then you enter on the 15-minute time frame. Again, 15-minute time frame, not 2 minutes, not 1 minute, not 10 minutes, 15 minutes. If you want to try other time frames, that's entirely up to you. And number 4, I think this is the most important part. You need to target the most likely zone. So I always tell my VIP members and people that follow me, even before you enter a trade, you need to know where you're gonna get out. That is a very important thing. If you're not doing that, whew, you have a lot to learn. So it's that. Now let's go to the charts and follow it. So when you see this, what is this? Well, you might be saying, well, Panda, this is just some candles. The difference is that here we can read volume, okay? So what we can see in here is that the bullish momentum, which is the bull candles, is very strong. So if we had some sort of structure here and we broke above it, we can see that there's a lot of momentum. Momentum is what keeps the market moving. Whereas this one, it is pretty much the same thing as this. The only difference is this has more corrective move. It's going up, a bit correction, going up, a bit correction. But still, if we have some sort of structure here and we broke above it, this still counts. This is very easy to see. This is a bit more tricky, but both tell the same story, that we have a break of structure. Okay, so it's very important. If you see this, you can be pretty much guaranteed that when you have a pullback, if you have it, it is gonna go up even more. Whereas this is a bit more tricky, but this happens more in the market because this is too obvious. Like if you go back, you can see this, everyone knows this. Whereas this is a bit more tricky, it's hard to the untrained eye, but at the same time, they're telling the same stories. You're likely to see this more often in the market. So try to practice both. I'm gonna give an example of this and this, okay? So point number 1 is we need to identify strong break of structure on the 4 hours. So let's do that. So we can see we had some sort of structure and then we broke above it. Okay, so we're gonna call this BOS, break of structure, and we are on the 4-hour time frame, right, as you can see, and we can see there is a lot of momentum. Point number 2, wait for a pullback within the Fib golden zone. Okay, let's go to the chart. So if price broke from here and it's here at the moment, so you grab your Fib tool, you go from this swing low to this swing, okay? And our golden zone is here. Look, let me zoom in. So it's between the 0.5 and 0.618. Okay, this is my Fibonacci golden zone. We're gonna be mixing simple Fibonacci levels with with smart money concepts. Until price doesn't come to this area, we are not interested, okay? Remember that. Point number 3, enter after liquidity grab on the 15-minute, okay? So now what we do, we can go back to the 1 hour and then we can play price to see what happens. All of this, we are not interested. None of this, we are not interested. Okay, now price is in the zone. This is the Fibonacci golden zone, okay? Now we need to see price do some sort of liquidity grab. One liquidity grab that I really like is you want price to play around and then wick. And this wick down, it needs to be at least 20 pips the wick, okay? And it needs to be a very strong wick. It can't be like a simple one, okay? So now we need to see that wick. All of this, if I just highlight it, it is price generating liquidity. And this is not random, it happens for a reason. Price moved up, now it's playing around within the golden zone. So all of this is liquidity being generated, and we are waiting for price to take this liquidity, okay? So I'm gonna put something like this. This is liquidity, okay? Now you can go to the 15-minute, and we need liquidity to be taken. There we go. So not this candle, this other one, yeah, the previous one. So you can see liquidity was taken. You could have made your entry here, okay? Now let's go back to the rules. So you need to make an entry after liquidity graph has been done on a 15-minute. We saw it wicked, and let's see how many pips is it. We can see that from here to here it is over almost 40 pips, so that's good. We need 20 at least. Target the most likely zone. Very important stuff. So if we made an entry here, we need to look on the 1 hour where price is likely to go. We got two areas that we can target. One is this recent high, yeah, or two, we can go for this order block. It's entirely up to you. Personally, I would go for this recent high because it's most likely to be hit. So if you go in for the second one, then maybe at this point move your stop loss to break even, and from here you would adjust your stop loss to get your whatever RR you want. Let's say I want to go for 3 RR, yeah? So I am in the trade at this point, okay? After this end here, okay? It came down, you still would have survived because there's a lot of pips that it can go down to. Then all you would do, you let your trade go and do its thing, and within 2 candles you would have made your 3R, okay? Done. Big winner. Call it a week, move on, and wait for next week before you come back for more of this, okay? So this is the simple version. Now let me show you a more complicated version, and we still apply the same thing. So here we have a break of structure again. We're gonna call it BOS, okay? That was the first requirement, and we broke with a lot of bullish momentum. It's a bit more corrective, but still it's a breakout. So here we put a fib from here to there, and now we wait for price to come back within the Fibonacci golden zone. And also a bit of smart money for you. If price comes down all the way here, it's going to be taking all of this liquidity. This is what is known as visible liquidity, trendline liquidity. If you heard it on YouTube, is that. So it's taking out all of the early buyers. And here again, same thing. You do nothing. You let for price to come to your level. Now, when price came down here, it closed under that level. That is totally fine. We need to see what price does next. Beautiful stuff. Again, is it more than 20 pips? Easily. So you can see here, it went down, took all of this liquidity. Let's go back to the 1 hour, you can see. And you see, price still has not broken structure, because this is structure. This wick, for me, is just a liquidity grab. If it closed under, okay, because from here is where we made the high. So still, we haven't broken the structure. So still is a very valid setup. It took all of the liquidity, the imbalance, all of that has been fixed. If there was any imbalance, let's see if there was any imbalance on the 15-minute. Yeah, there was a bit of imbalance here that was fixed, and liquidity was taken. Not just that, it is also taken the liquidity from this low, okay? And if we turn on my little indicator, we can see that here was another form of liquidity. This is known as Asian lows. This is a hidden liquidity. So price took that, even took this one and the trend line. So many liquidity was taken from every single direction. And again, just as I said before, you go back to your rules. We'd had a break on the 4 hours, yes. We have a pullback on the fib level, yes. You need to make an entry on the 15-minute, which we have now, and we need to target the most likely zone. So let's say we're gonna enter here after this 15-minute candle close. Where do we get out? Well, let's see, probably at this order block here. Yeah, something like that, or maybe at the high. It's entirely up to you. Okay, and now you would adjust your stop loss to make your 3R if you're going after 3R. If you're going for 5R, R, and you just adjust it. Yeah, and now, so we're here. Do you see how beautiful price moves if you're waiting and you're patient? It did all of the correction, it grabbed liquidity, and after this, it literally had no reason to play around, and it just shot up. Look, after this, if we go and get rid of all of this, look at this. This move was monstrous. Look, we got here, we got a 3R. If you held, you would have had over 20R. Look. And all because we were patient, and very important, we are following this trading plan. It is good to have a plan with a set of rules. It keeps you grounded as a good trader. And just use this. Trust me guys, if you use this and you wait for that perfect setup that meets all of these requirements, you're going to be a successful trader. So yeah guys, have a good time. I hope this video was good, and I'll see you guys next time. Peace.